What if everything you thought you knew about Trump's tariffs was just a smokescreen? For years, we were told these measures were meant to protect American workers, revive local industry, and rein in China. But what if behind those nationalist rhetoric lies a completely different agenda? One that has less to do with factories or jobs than with geopolitical strategy, economic manipulation, and above all, power. While the media debates trade deficits and the tariff war, Donald Trump is moving the pieces on a much more complex board. One in which tariffs weren't the objective, but the excuse. Because when you raise the prices of foreign products, you force the country to look inward. And in that move, what seems like protection can turn into pressure. Pressure on the Federal Reserve, on international allies, on voters. Pressure that, when used properly, gives you influence where before there was only resistance. What if tariffs aren't an economic mistake, but a deliberate tactic to achieve their goals, such as slowing the economy just enough to force a drop in interest rates, or perhaps destabilizing certain markets to better position the dollar? Because what Trump did with tariffs goes beyond trade. And today, we're going to show you the hidden truth behind those reciprocal tariffs, which in reality could have been anything but reciprocal. The April 2nd coup. On April 2nd, 2025, Trump was up to his old tricks again on national television. And with his trademark direct style, he announced something not everyone believed would happen. Tariffs of at least 10% on all imports and upwards of 50% on some Asian countries. Just like that, without any anesthesia. He sold it as a patriotic move to defend the American worker and restore the glory of the national industry. But what followed was a financial earthquake. Stock markets plummeted in a matter of hours. The Dow Jones plummeted, falling 2,250 points in just 5 days. The Nasdaq lost more than 6%, and the S&P 500 fell nearly 6%. Everyone broke out in a cold sweat. The Chinese yuan plummeted to its lowest level in over a year, and the euro also lost ground against the dollar, which, ironically, strengthened, as often happens in panic. Companies were nervous, investors were fleeing, and the media was going wild. Many were wondering, what is Trump doing? Is he defending the country or playing chess with the global economy? The truth is, beyond the patriotic speeches, this move had more layers than met the eye. And we were just seeing the first domino fall. Trump sold it as a matter of reciprocity. His famous line was, "If they give us 50%, we'll give them 50% too." Seems fair, right? But what the media doesn't tell you is that these tariffs don't just work as a trade tool, but as a strategic weapon. And not just against China, but against another potential player, the U.S. Federal Reserve. To fully understand the true purpose behind Donald Trump's recent tariff moves, it is necessary to look closely at his complex relationship with the U.S. Federal Reserve, particularly its chairman, Jerome Powell. Since his first term, Trump has maintained a critical and defiant stance toward the Fed, openly accusing Powell of holding back the country's economic growth by keeping interest rates too high. Between 2018 and 2019, he even went so far as to claim that Powell didn't know what he was doing and that his decisions were ruining the economy. At that time, rates were above 2%, something that Trump considered unacceptable in an environment where, according to him, everything should be aligned to promote constant and unstoppable growth. Hostility toward monetary policy wasn't an isolated whim. Trump, as a businessman and as president, had a clear vision: economic growth at all costs. In multiple interviews, press conferences, and even social media posts, he insisted that the Fed should immediately cut interest rates. His argument was that an overly strong dollar harmed the international competitiveness of American companies and that the high cost of money discouraged private investment. Furthermore, in a world where other powers like China and the European Union were implementing economic stimulus and expansionary monetary policies, he felt the United States was imposing a disadvantage on itself. But the most revealing aspect of this conflict was that Trump's pressure wasn't simply a public battle for media purposes. Behind his complaints lay a cold and meticulously calculated strategy. Trump understood perfectly well that the Fed is an independent institution, designed precisely to resist political interference. He couldn't directly force it to make decisions, but he could influence its operating environment. And that's where his tariffs come into play. The imposition of tariffs on foreign products, publicly presented as measures to defend American industry or correct trade imbalances, also served as a tool of indirect pressure on the Fed. Trump knew that if the tariffs caused economic instability, as they did, the Federal Reserve would be forced to intervene. The consequences were immediate. Private investment declined, uncertainty increased among businesses, tensions in financial markets, and fears of a possible economic slowdown. All of this, combined, created a context in which Powell and his team could not remain indifferent. And that's exactly what happened. In 2019, the Federal Reserve, which had been on the heels of a series of rate hikes, was forced to reverse course and begin cutting rates for the first time in 11 years. Official statements spoke of preemptive adjustments and a moderation in the growth outlook, but many analysts agree that it was the economic pressure stemming from the tariffs, not traditional macroeconomic data, that prompted the Fed to act. In other words, Donald Trump achieved what he wanted: to create an environment in which the Fed had no choice but to lower rates, without him having to give a direct order. A masterstroke of economic manipulation disguised under the banner of protectionism. Before continuing, if you find the content useful, remember to leave a like and subscribe to the channel so you don't miss the next video. Now let's continue. At first glance, Donald Trump's economic policy may seem erratic, impulsive, or even chaotic. But if you take the time to read between the lines, or rather, between the tweets, a pattern emerges. A pattern clearly explained in his most famous book, The Art of the Deal, published in 1987, a kind of personal manifesto in which Trump reveals not only how he negotiates, but also how he thinks and, above all, how he manipulates the context to his advantage. One of the most quoted lines from the book is, "I aim very high and then keep pushing and pushing to get what I'm looking for." That's not just a business tactic, it's the linchpin of his entire political strategy. The method he proposes is simple in appearance, but sophisticated in execution. It is based on 3 phases. First, launching an extreme proposal that unsettles or intimidates the interlocutor. Second, sustaining that proposal long enough to generate pressure. And third, negotiating from that inflated position to obtain a much more favorable outcome than would have been possible with a moderate initial stance. It's about controlling chaos, deliberately creating it, and then presenting yourself as the only figure capable of restoring order, but on your own terms. This method has been evident throughout his career, from his real estate ventures to his role as President of the United States. But in the realm of economic and trade policy, the clearest example is his use of tariffs. Much has been written about the reciprocal tariffs Trump imposed or threatened to impose on countries like China, Mexico, Germany, and even strategic partners like Canada and the European Union. The official narrative was simple. If they hit us with 25%, we'll do the same. No more unfair deals. America first. But the reality is that these tariffs, in many cases, weren't designed to last. They were the economic version of a smoke grenade. They confuse, upset the balance, trigger hasty responses, and allow the person throwing them to move in other directions while everyone else is busy putting out the fire. Back when Trump announced a blanket 10% tariff on all imports, with even higher rates for certain countries considered abusers of international trade. Experts called it economic ultranationalism, and some media outlets spoke of a return to 1930-style protectionism. For several months, the Federal Reserve, led by Jerome Powell, had been resisting pressure from the White House to reduce interest rates. Inflation was contained, but the Fed maintained a cautious stance, raising rates gradually to prevent economic overheating. Trump didn't like that. For him, a strong economy meant low rates, a competitive dollar, and a rising stock market. And just as we saw earlier in 2019, Donald Trump couldn't simply order the Fed to lower interest rates. Once again, the solution was to create an economic environment volatile enough to force it to do so. Controlled chaos comes into play. Trump knew full well that imposing tariffs abruptly and across the board would provoke immediate reactions, a plunge in the markets, concern among business leaders, a revision of economic forecasts, and a growing fear that the economy could enter a recession. The 2025 tariffs were greeted with a wave of uncertainty. The Dow Jones Industrial Average lost more than 2,000 points in less than a week. Large companies began postponing investments. Some analysts were already talking about stagnation, while Trump himself publicly insisted that the solution was clear: Powell must lower rates immediately. The game was on, all to cause a momentary panic, and less than a week later, back down and give a 90-day extension before negotiating the tariffs. But then what exactly happened? Well, if you know Donald Trump even a little, you know that this extension wasn't a sign of weakness, as many of his critics wanted to interpret, but rather a carefully measured move. Trump wasn't seeking an endless trade war. His goal was to force a change in monetary policy without having to directly touch the levers of the Federal Reserve. And he succeeded. Just days after the stock market chaos and media hysteria, the media reported that Powell had stated, "We face a very uncertain outlook with a high risk of higher unemployment and inflation." In financial terms, that was a complete surrender, because now he wasn't just talking about inflation, he was also mentioning unemployment. This shift in focus is not insignificant. In classical economic theory, when a main risk is not inflation, but an economic slowdown that could lead to job losses, the logical tool is to reduce interest rates to stimulate aggregate demand. And that's exactly what Donald Trump wanted. History repeats itself more than once. The so-called reciprocal tariffs were never intended to protect domestic industry. They serve as geopolitical leverage, as a tool for monetary pressure. Tariff threats remain just that, threats. But their effect on the press, markets, and central banks is real, and that's what matters. The most perverse aspect of this is that many media outlets and analysts fell into the trap. They focused on the headlines, the percentages, and the high-sounding statements, without pausing to analyze the underlying pattern. Trump understands that markets are emotional creatures. As the English economist John Keynes famously observed, investors are guided by animal spirits. In other words, they react to fear faster than to logic. And a well-crafted narrative can have more impact than real policy. Therefore, tariffs are a piece of theater, a show stage to get the audience, the Fed, Wall Street, and multinational corporations, to react in a specific way. And just like in theater, the important thing wasn't that the gun was loaded, but that everyone believed it could fire at any moment. And the reaction was swift. As soon as Trump announced a 90-day extension for the implementation of the new tariffs, the market celebrated as if a peace treaty had been signed. The Nasdaq rose an impressive 12.1% in a single session, its second-best daily performance in history. Meanwhile, the Dow Jones gained 7.87%, erasing the slump of previous days. The S&P 500 also rebounded strongly, posting a 9.52% gain, its third-best day since World War II. Tech stocks breathed a sigh of relief, with Apple up an impressive 11.5%, Nvidia soaring 13.56%, Tesla leading the way with plus 13.49%, and Microsoft not far behind with plus 8.23%. The financial market responded euphorically. It was a clear signal. The threat was receding, and capital was flowing again. We can say, then, that what many interpret as impulsiveness or improvisation is actually a studied tactic. Trump doesn't necessarily seek consensus, but rather advantage. And to achieve it, he's willing to set the table on fire if that allows him to redesign it according to his interests. So, according to their own thinking, their tariffs aren't a traditional trade policy. They're a negotiating tool. And as such, they work best when the other side doesn't know whether they're real or just a threat. That's his style: exaggerate, provoke, inconvenience, and then close deals while everyone else tries to figure out what's going on. In that sense, chaos isn't the result. It's the means. And Trump masters it like few others. Because when everyone is distracted by the storm, he's already writing the next chapter of his deal. Do you think Trump's reciprocal tariffs are a negotiating masterstroke or a ticking time bomb for the global economy? Let us know your thoughts in the comments. If you enjoyed today's content, Remember to give it a like and subscribe to the channel so you don't miss our next videos. See you next time.